Hey everybody, Courtney Smith here with an interesting story. JP Morgan paying $920 million to resolve market manipulation probes. Now that's almost $1 billion they're spending. Now what they did is that they were accused of manipulating the markets, treasury securities specifically, using a technique called spoofing. Now let me explain to you what spoofing is. If I were to, let's say I wanted to buy Apple stock, and if I put in an order to buy 1,000 shares, nobody would notice my order. It's too small of an order. So it wouldn't change the price of the stock at all. It would have no impact. But what if I put in an order to buy 1 billion shares of stock right now? Well, all the market makers would look and say, "Oh my God, there's a huge buyer of Apple," and the price would jump up. Okay, so me just putting in an order without buying would show that there's latent buying pressure in the market and would cause the price to go up. That's spoofing. When you put in an order that you don't really want to get filled on, I don't really want to buy 1 billion shares of Apple, but I know that if I put in a huge order, it'll move the price. So they apparently did that with the Treasury securities. Now, you notice I say apparently. If they weren't convicted, I would have said alleged, because everybody's innocent until proven guilty. We must always adhere to that principle here in the United States. But one of the things they did is that they did what's called they agreed to a deferred prosecution agreement through which the bank admitted wrongdoing on its precious metals and treasuries trading desks. So they've admitted that they've done something wrong. So now we can say, apparently, or we could even say it's a fact that they manipulated the market in precious metals and treasuries. Now, the fact that they're spending $1 billion is also a pretty strong indication that they did something wrong. So even if they did not agree to a deferred prosecution, I would have assumed that they were wrong, even though we must always assume that people are innocent until proven guilty. Now, part of the reason I bring this to you is because JP Morgan has a reputation of being probably the best run bank, maybe in the world, but certainly in the United States, much better than Citibank or Wells Fargo or all the rest of them. So when JP Morgan is caught cheating, that has a big impact in the marketplace. Okay, everybody looks and says, "Oh my God, JP Morgan got caught." Now, here's the other thing. I remember once that I was working for a company. Oops. I was working for a company and we wanted to borrow money from, sorry, my phone is ringing and it's my good buddy Scam Likely is calling me. So, we wanted to borrow money from Citibank or something, some company like that. Okay, a big, fancy bank, and they basically kind of looked down their nose at us and like, well, we don't really want to deal with you because we don't really know you. And so I came prepared, and I pulled out a fat printout about 3 inches thick, and I laid it on the table. I said, well, I know about you. And this is a list of all of the charges against you where you were convicted of crimes, including just out and out stealing money from your customers. So I'm not so sure I want to do business with you. Maybe you could comment on these cases. Well, of course, they had no comment because they're used to being a hoity-toity bank. Same thing with JP Morgan. These hoity-toity banks, which have tremendous influence in government and tremendous influence in the market, they're lowlifes. They're lowlifes. They do things like this, manipulate the market. And of course, little guys like you and me, we can't stand up to that. Okay, we can do things about that. And one of these days, maybe I'll do uh, uh, a video on how to make money from J.P. Morgan manipulating the markets. But that's for another day. But the point is, just because they have a big fancy name like J.P. Morgan or Citibank or whatever, they're low lifes too. All right, everybody. Talk to you later.